welcome to the CNBC TV 18 special, where over the next half an hour we will be in conversation with the Vice Chairman and CEO of one of the country's largest mortgage lenders, HDFC Limited. Now, whether it is the much talked about GDP numbers that have just come out, demonetization and the aftermath of the note ban and the impact it left on the economy, or his very own HDFC Limited and the much talked about news around its merger with Max Financial, we'll talk about all of that with Mr. Keki Mistry. Sir, thank you very much for joining us today on this special show. First, I'll start by asking you, since the health of any financial institution is so closely linked to how the larger macro picture is. We saw GDP numbers come out yesterday at 7.1% for the first fiscal. What do you make of those numbers?
Well, I guess the fourth quarter numbers would have had some impact because of demonetization. I repeat what I've said so many times in the past, that in my view, and I said this even when demonetization happened, that it's a phenomenal thing for the long term. It will help India in a very, very big way. But in the short term, for 2-3 months, there'll be an impact. And that's precisely what we are seeing. I think that impact is behind us. After remonetization has happened, things are completely back to normal. And in fact, things are booming at this point of time. So I would be I would not be worried at all about the low GDP numbers you had in the fourth quarter, because the outlook going forward to me looks very good. If you look at any macro data today, macro data looks fantastic. Current account deficit, fiscal deficit, inflation, interest rates, currency, the reserves that the RBI has built up. So never in India's history have we looked at things as strong, or never in history has India looked as strong as it does today. The only negative is we are not seeing a pickup or any real significant pickup in private sector investment. That will happen over time.
Yeah. So do you see us getting back to double-digit growth numbers very soon? You seem very optimistic.
I am very optimistic, to be honest. I don't know about these numbers, because these numbers are deceptive in a sense, because so much depends upon what happened in the previous year in that quarter. So if you had a strong quarter, the number looks weak. If you had a weak quarter, the number looks strong. So I take this with a pinch of salt. But I would say GDP will keep expanding over time. I think this year we should be looking at a number which is just shy of 8. And then hopefully with every passing year, the number could go higher. Now, I don't know about double digit.
Well, the other subject you touched upon was demonetization, and now that we have the benefit of hindsight, overall net, how do you see the impact? I know in housing you said the inquiries have only gone up month after month, but for the economy, for the smaller sectors that were impacted, do you see all of that reversed already?
Oh, absolutely, I think so. I think demonetization, it was a huge success for 3 reasons. One is that everyone had a lot of unproductive assets, which is really physical cash lying at home. And because of this whole demonetization process, people have deposited all that cash into the bank account, and now from their bank accounts, that money is finding its way into stock markets, it's finding its way into bond funds, it's finding its way into insurance companies. So basically, unproductive cash or unproductive assets have got converted into productive financial assets, which in the long term is bringing interest rates lower and creating this, this buzz around various financial companies. Second thing I think is that a lot of people went and used the accounts of poor, so the media reports say, your reports say, that a lot of people use bank accounts of poorer people to, convert their black money into white money. We don't know whether that's right or wrong. But if that is right, then a lot of there has been some transmission of wealth between the rich and the poor. And a rich man who had a few million rupees under his...
has made a poor man richer.
Has made a poor man richer, and that poorer man has a much greater likelihood of consuming than a rich man who had so much cash with him. But on a serious note, the third and the most important benefit, according to me, is that the tax department now has a record of all those people who were in earlier days not paying taxes and suddenly found themselves with a lot of cash.
9 million new taxpayers.
Absolutely. So you can add so many more taxpayers and really improve the tax to GDP ratio, which in India has been struggling for a while.
The other thing that has been struggling is, again, as you said, the private investment.
Correct.
What are some of the things you'd like to see from the government to help revive that investment?
See, what we have to understand is why we have to really get down to the root on why investments are slow. Investments are slow because people have built excess capacity over time. Excess capacity was built years ago. That excess capacity is not got fully utilized for 2 reasons. One is global events. So if you look at it globally, things have not looked very good in the last 4 or 5 years. global economy has slowed down. There's some signs of revival in Europe. China is still weak. US is sort of, you get a lot of mixed data coming out of US. So the global economy is weak. So that has partly impacted job creation and private investment. The other thing is that the excess capacity that has got built up in the system needs to, you need to get to capacity utilization level of around 80, 81, 82% before you start seeing private investments happening. This is typically what we've seen over the years. And my sense is currently we are around 73, 74%, somewhere around that level. So we are not that far away from seeing a pickup in the investment cycle, but we are not exactly there where the next month you're going to see a big.
But how far away is that far away?
It's very difficult to say that. See, it depends on how quickly we can improve the capacity, how quickly people can utilize the capacity, which is then a function of demand. Demand is a function of global events, and demand is a function of local income. Now, local income will rise, hopefully, because there is a little more of job creation happening now than was the case in the past. I think this trust on housing, and we come back to housing, it genuinely benefits the economy because housing is a huge job creator. And by giving a boost to the housing sector through the subsidy scheme, which I think is, I truly believe that this is the best time to buy a property.
You always say that.
No, I never said that. I never used to say that in the past. I've only said that in the last 2 months. And I genuinely mean it. So I'm looking to buy a property. So let me tell you that. So I do believe this is the right time to buy a property. But coming to what you talked about capacity, the fact is that with construction, a lot of jobs get created. You get construction workers, you get carpenters, masons, plumbers, and the actual activity of construction takes into account, big benefits for the steel sector, cement, steel, paint, all of that. So the core sectors in the economy get a boost. And if they get a boost, they start producing more, automatically you'll start seeing investments happening.
What kind of credit growth are you seeing in the housing sector at the moment? I mean, you're very optimistic. Now is the right time to buy, but are consumers really buying that slowly?
Oh yes, people are. People have become, post-demonetization there was a slowdown. People started believing that prices would come down, thinking that there's a lot of cash in real estate, and believe me, there never was that much of cash in real estate. I mean, if you were to go and buy a property in Mumbai, I'm giving Mumbai only as an example, you would see that in any property that you are buying from a builder, in most of these cases there was 100% check payment. There was nothing that you had to pay in cash. So I think the cash part really went out of the real estate market because of changes in tax laws. Where a few years ago they said that when you are selling a property, your sale price will be deemed to be the higher of the price as per the ready reckoner or the price as transacted by you. So there was no point in concealing your sale price and showing a lower sale consideration, because in any case you'd have to pay capital gains tax on a higher price. So I think with that, cash went away. But still there was a belief, in my view wrong belief, that there was a lot of cash in real estate, and therefore people who wanted to buy property started waiting, and that never happened. So I think from February onwards we started seeing this pickup in demand, and that hopefully continues for a while.
Is that being helped by the fact that there's an intense competition among banks, now that MCLR has been falling and each bank is trying to outdo the other now? I think the lowest rates for home loans we're talking about is 8.3 odd percent.
8.35.
Is that spurring demand further?
I see, to my mind, interest rates is just one of the factors that a person considers.
But an important one, nonetheless.
No, I would say important, yes, but there are far more important factors. The most important factor, there are two most important factors. The first important factor is the belief that property prices aren't going to fall. If you believe that prices are going to fall, then irrespective of what the interest rate is, people will hold on to buying houses. I think we are past that stage. I think people have begun to realize that prices aren't really going to come down. Second is the state of your own well-being. So if you have a job where you believe that your job is at risk, you're going to lose your job the next day, then in that kind of an environment, people will not buy houses. That is not the case today. And then the third factor, after you decided to buy a house, the third factor is interest rates. But interest rates has never mattered much because of two reasons. One is that when you take a floating rate loan, even if you take a loan when interest rates are high, ultimately your cost will come down when rates come down. And secondly, more importantly, is that when you're buying a house, there are fiscal benefits on a housing loan. So the tax benefits on a housing loan, the interest is tax deductible up to 2 lakh rupees a year. Principal is one of the avenues of saving, and up to 1,50,000 rupees is a deduction that's available. So the effective cost of taking a loan is sub 4%. So then it doesn't matter whether interest rates are 8.35 or 8.45 or how does it matter?
That's very consumer-centric. Let me get back to the banks. Is there really a lot of pressure to bring down rates because the largest players in the system have brought them down to such an extent?
See, if you look at it from an interest rate perspective, there are really, the way we consider it, 3 or 4 competitors for someone like us. State Bank of India, ICICI, Axis Bank, to some extent LIC Housing. These are really our 4 competitors. Most of the other players that are there in the market are catering to a different category of customers. It's not that they're doing anything wrong, but they are catering to a different category of customers where they charge a high interest rate. But at the end of the day, you have to realize that that cost of funding has been coming down post demonetization, largely because of the fact that all that liquidity is there in the system. So all the banks have been doing, and what we have been doing, is as our costs come down, we are passing on that benefit to consumers. But you must remember that the big bang change in interest rates that happened in January, that is certainly not going to repeat. In my view, personally, RBI is done with cutting rates.
For the calendar year, for the fiscal year?
Well, for the calendar year. I mean, for what is envisageable.
You're not expecting any action in this June quarter?
No, not in my view. Certainly not in my view. At best, and this is always a possibility, if monsoons are very good, if the global environment is very benign, you could perhaps remote possibility, see a 0.25% cut in rates, but certainly not more than that.
What about the next calendar year? Is there a possibility?
It's too far away to look. It's too far away to look.
So without the Reserve Bank of India bringing down its key repo rates, I mean, some of you are perhaps not even following, I mean, not dependent entirely on that. Do you still see rates coming off?
Not much.
Further for consumers?
I mean, it's always possible for a 5-10 basis points cut in rates here and there, or for rates to go higher by 5-10 basis points over a period of time, but it's not going to be material.
All right, so on that note, we'll take a very quick break, but stay with us as we'll continue our conversation with Mr. Keki Mistry.